Ladies and gentlemen, welcome back to Vietnamstockmarket Opportunities. It's an honor to have the opportunity to address such a distinguished audience. And if you want to open a legal trading account, please contact us with the email Vietnamstockmarket.entry at gmail.com, Telegram, Vietnamstockmarket.entry, with the phone number is +8491 432 6556. Or you can also scan the QR code on the screen so that we can support you. And the other way to contact with us is please follow and subscribe the channel name Areca Capital Channel. The owner of this YouTube channel is Areca Hồng Nguyen. She's a personal financial advisor. You can contact her with the email home.nguyen@vcsc.com.vn with the phone number is +8491 432 6556. We always welcome you to our office on the 11th floor, 109 Trinh Đạo Street, Hoàn Kiếm District, Hà Nội, Vietnam. And the purpose of this video is to update you about TLG. TLG is a leading stationery marker with various products, writing instruments, and office, school, and art supplies. TLG owns 60% of the domestic writing instrument market and is expanding globally. TLG has had a partnership with New World Brands, a leading US-based global consumer goods company since early 2019. As you can see, this is the report which were collected by Viet Capital Securities about TLG on the 28th November 2022, with the current price is 47,300 Vietnam dong. Target price 57,500 Vietnam dong. Previous target price 64,000 Vietnam dong. Road to normalize low plastic prices to support margins. We reiterate our buy rating for TLG. However, we cut our target price by 10% as we increase our WACC assumption from 11.1% to 11.9% and trim our aggregate 2022 forward, 2026 forward net profit after tax by 2% due to our lower sales volume assumptions. We forecast revenue to rise 7% year-over-year in 2023 after a 32% year-over-year rebound in 2022. 2023 forward revenue growth represents a deceleration as the pre-COVID level as 1. We are conservative on demand from both the export and domestic markets in the short term, and 2. TLG continues to focus less on efficient trading SKUs compares to pre-COVID to improve profit margins. We forecast core net profits after tax, including foreign exchange gains, will increase 10% year-over-year in 2023. We forecast our 2022 to 2025 core EPS CAGR of 13% as we remain confident regarding TLG's medium-term outlook that is premised on 1. The company's solid market leadership thanks to its diversified product portfolio and widespread distribution network. 2. The structural growth in demand for stationery from Vietnam's high-growth education and office sectors. And 3. Increase penetration into export markets. TLG's valuation is undemanding at 2023-2024 forwards PE of 7.8 times, 7.4 times compared to the 12-month average peer LTM PE medium of 12.6 times. The company's consumer demand is defensive and its balance sheet is defensive against risks of Vietnam depreciation and interest rate hikes. Downside risk weaker than expected margins from high plastic costs. We expect 2023 forward revenue growth to normalize. We forecast year-over-year changes of domestic sales and exports of 12% and less than 9% respectively. TLG acknowledge there is risk for weaker demand as inflationary pressure mounts. Regarding exports, although they jumped 60% year-over-year in 9 months 2022, the company expects 2023 to be a more difficult year for exports from its observation of other industries. GPM to remain high as input plastic prices cooled after rally. In H1 2022, TLG benefited from low-cost input plastic inventory that was accumulated in 2021 because input plastic prices rose 25% in H1 2022 and have dropped 40% since May 2022. We forecast mainly flat 2023 GPM 43.9% compared to 2022 forwards 44.2%. Selling expenses revenue to decline from a high 2022 base. TLG implemented heavy promotional activities and advertising in 9 months 2022 to support sales before the back-to-school season and pent-up demand caused by travel restrictions in 2021. As demand normalizes, we expect the company's selling expenses to account for 17% of 2023 forward revenue compared to 18.2% in 2022 forwards as it lowers advertising spending. We forecast foreign exchange gains to ease in 2023. TLG generated 800,000 US dollar of foreign exchange gains in 9 months 2022, while its operation is naturally hedged against fluctuations in the US dollar and Vietnam zone exchange rates. The company held 5 million US dollar in cash as of October 2022, which benefited from a depreciation of the Vietnam zone as the US dollar. We forecast foreign exchange gains to account for 5%, 1% of 2022 forwards, 2023 forwards. Net profits after tax as we forecast of 2% depreciation of the Vietnam dong compared to US dollar in 2023 compared to 10% in 2022 forward. Let's go on to the second part, that is the 9 months 2022 recap. Sales rebound thanks to pent-up demand, less trading focused on low plastic prices, providing EBIT margin. Net revenue. TLG recorded robust year-over-year revenue growth across all product segments as demand recovered from 2021's low base, along with pent-up demand for the back-to-school seasons in Q2 to Q3 2022. Writing instruments. Tianlong grew recorded robust year-over-year revenue growth across all product segments as a result of a demand recovery as educational services resumed after being disrupted by COVID-19 in 2021. We note that Q2 and Q3 normally is TLG's high season, back to school season, of which exports partly thanks to fewer COVID-19 disruptions on manufacturing in 2022. Net profit after tax MI strong year-over-year growth in H1 2022 was mostly driven by a sales recovery, gross margin expansion as input plastic prices dropped. TLG optimizing its products mix and lower than expected SG&A expenses. Gross margins. 9 months 2022 gross margin expanded year-over-year thanks to economies of scale, lower input plastics prices, and TLG continuing to optimize its product categories with higher margins. SG&A as percent sales. SG&A expenses as a proportion of sales increased to 27% in 8 months 2022 from 24.8% in H1 2022 amidst TLG's promotional activities for the back-to-school season. However, per management, significant costs related to market activities were not recorded in 9 months 2022. And now we move to the 2022 outlook. Sales to rebound from 2021's low-based gross margin to expand. Office supplies, school supplies, art supplies, VCSC comments, and writing instruments, mechanized trading, and others. We continue to expect a strong year-over-year rebound in revenue across TLG's product segments in 2022 from 2021's low base. EBIT, mainly thanks to higher foreign exchange gains. Net other gain lots, mainly thanks to higher foreign exchange gains. We expect TLG to continue generating foreign exchange gains in Q4 2022 thanks to its US dollar cash balance and the 4% depreciation of the Vietnam dong compared to the US dollar in October 2022. Net profits after tax MI strong year-over-year growth thanks to a sales volume recovery from COVID-related disruptions in 2021 and margin expansion. Gross margin, we expect TLG's strategy to convert sales from thin margin trading products to higher margin products throughout 2021. 2022 will support the sustainability of its gross margins in 2022 and beyond. SG&A as percent sales, we reiterate our view that TLG's SG&A expenses will escalate the rest of 2022, which is due to TLG not recording significant marketing expenses in 9 months 2022 per management. We expect SG&A on sales to edge down in 2022 forward compared to 2021, which is mostly due to higher sales year-over-year and fewer COVID-related expenses. 2023 outlook revenue net profit after tax to deliver single-digit growth. Writing instruments office supplies, school supplies, art supplies, mechanized trading, and others. Sales growth to decelerate compared to 2022 forward and pre-COVID levels as pent-up demand eases. In addition, we are conservative about consumer spending in 2023 forward. Flat trading revenue year-over-year as TLG continues to focus on higher margin products. Of which exports year-over-year decline in due to our expectation for weaker foreign demand. Net other gain loss due to lower foreign exchange gains as explained on page 1. Gross margin. Input plastic prices rose 25% in H1 2022 and have dropped 40% since May 2022. As a result, we forecast nearly flat 2023 GPM 43.9% compared to 2022 forward 44.2%. SG&A as percent sales. As demand normalizes year-over-year, we expect the company's selling expenses will account for 17.5% of 2023 forward revenue compared to 18.2% in 2022 forward as it tones down advertising spending. However, we continue to expect TLG to remain aggressive and promotional and advertising activity to push sales, especially for new and high margin products. Therefore, our 2023 forward SG&A expenses as a proportion of sales is higher compared to the average of 25.5% in 2018 to 2020. And now let's move on to the valuation. We continue to use a combination of a DCF 80% weighting and PE 20% weighting methodologies in our valuation. In this update report, we roll our target price horizon to end 2023 compared to mid-2023 as previously. We attribute a weighting of 80% of the DCF method as we believe this fairly reflects TLG's long-term growth prospects and stable cash flow generation. In this update report, we incorporate an increase in our house equity risk premium from 7% to 8%. In addition, we raise our cost of debt assumption from 8% to 9%. As a result, our WACC increased from 11.1% to 11.9%. We lower our target PE from 11.9 times to 10 times to reflect the change in our WACC assumption. Figure 6 valuation summary. Figure 7 DCF valuation. Figure 8 sensitivity analysis of our target price for TLG in relation to DCF's WACC and terminal growth rates, ceteris paribus. Figure 10 historical price to earnings ratio of TLG compares to peer. Recommendation history. And financial statements. And that brings me to the end of my presentation about TLG, Tianlong Group. Hope this video and some informations will be useful for you. And if you want to open a legal trading account, please contact us with the information on screen so that we can assist you. Thank you for your listening and see you next time.